Thousands of lawful permanent residents woke up on March 1st to a reality they never expected. Bank officers started making quiet, scripted phone calls. Loan officers began sending careful, formal emails. And immigrant entrepreneurs, many of them green card holders who have lived here for decades, paid taxes, and built the backbone of their communities, suddenly heard the same devastating sentence: "You're no longer eligible." This wasn't because of a fraud investigation or bad credit. It happened because of a complete reversal of decades-old lending policies under SBA Policy Notice 5000876441. There's a lot of noise online right now saying green card holders have been banned from business. That is not accurate, but what did change is a structural shift that could bankrupt a business if you don't understand the fine print. Stay with me, because missing this detail could cost you access to capital when you need it most. Here on USA Immigration Path, we don't amplify panic, we analyze policy. Now let's talk about what actually happened on March 1st, 2026. The Small Business Administration implemented what many are now calling the 100% rule, and the language in Policy Notice 5000876441 is unforgiving. As of March 1st for SBA 7A and 504 loans, 100% of all direct and indirect owners of a business must be U.S. citizens or U.S. nationals. Not majority owners, not controlling owners, all owners, 100%. If even one owner, holding even 1% of equity, is a green card holder, the entire business becomes ineligible for SBA-backed financing. This is a massive departure from previous guidance, which allowed a 5% exception for foreign nationals or non-resident citizens. That flexibility is officially dead, prompted by Executive Order 15159. Which aims to prioritize federal resources strictly for U.S. citizens. Let that sink in. If you are a lawful permanent resident with a 1% ownership stake in a restaurant, a trucking company, or a tech firm, that business is now disqualified from SBA loan programs, even if the other 99% of the company is owned by U.S. citizens. This is where it gets dangerous for family businesses. A common structure is a U.S. citizen spouse owning 70%, and a green card holder spouse holding 30%. As of March 1st, that business fails the eligibility test, and the rule doesn't just look at the names on your immediate paperwork. It applies to both direct and indirect ownership. If your company is owned by a holding company, and one of that holding company's members is a green card holder, the operating business is disqualified. This isn't a small technicality. It's an economic earthquake. Approximately 18 to 19% of all small businesses in the U.S. are immigrant-owned, generating over $1 trillion in annual revenue. When you cut off SBA 7A and 504 loans, which offer lower interest rates and longer repayment terms, you stall expansion, freeze hiring, and kill cash flow for millions of people who have proven their commitment to the American economy. But let's look at the facts, not the fear. This rule does not revoke your green card. It does not cancel your business license. And, based on current guidance, it does not automatically call in existing SBA loans that were already funded before the March 1st cutoff. It applies to new applications and ongoing compliance. Imagine a family-owned trucking company in Texas. The father is a green card holder who has lived here for 20 years. The daughter is a U.S. citizen. They split ownership 50-50. They want to expand their fleet. Under the 100% rule, their application is dead on arrival. It doesn't matter that he's paid taxes or employs dozens of Americans. Under this policy, eligibility hinges strictly on citizenship status. Some advisors are saying, just remove the green card holder from ownership. Be very careful. Transferring ownership has massive tax consequences, affects liability, and can be flagged by banks if it looks like a temporary workaround just to get a loan. This is where professional legal guidance becomes critical. So, if SBA doors are closing, what is left? You can still seek conventional, non-government-backed loans from private banks or credit unions. But remember, conventional loans often carry higher interest rates and shorter repayment terms, which increases your risk. For many entrepreneurs, this policy makes the difference between a green card and citizenship a financial life or death issue. Naturalization is now the only clear pathway to restoring SBA eligibility. If you've had your green card for 5 years or 3 years through marriage, citizenship is no longer just a symbolic milestone. It is now an operational necessity for your business. What should you do today? First, pull your operating agreements and shareholder ledgers. Identify every owner, even the 1% stakeholders. Second, speak with both a qualified immigration attorney and a business attorney before making structural changes. Third, if you are eligible for naturalization, start the process immediately. Remember that as of March 1st, USCIS premium processing fees have also increased to $2,765 for most employment-based categories, so the cost of doing business is rising across the board. Immigration policy and economic policy are intersecting in a way we haven't seen in decades. If you're a green card holder building a future in this country, you deserve clear information, not viral exaggeration. Subscribe now for the latest verified updates on the DHS shutdown and the March visa bulletin jumps. In a sea of noise, calm information is power, and that power protects your future.